Good afternoon and welcome back to the second part of Programme 12 of Health Wealth. This afternoon I'm interviewing Simon Dixon, the author of the book Bank to the Future, and now the founder of the company Bank to the Future as well. Simon, so we covered a lot of ground in the first half, but one thing I've realised we haven't really nailed down is what is crowdfunding?
Yeah.
And then what does it take to be successful in it?
Okay.
Let's start with those two things.
Sure. So crowdfunding is where you'd go to an online platform and they give you the tools to be able to create an online pitch for your business and what you want to raise finance for. Normally consists of a business plan, or consists of a video where you pitch to anyone that wants to look at it, what you're up to, and then it allows investors to do two things. They can either contribute some money to you just because they like what you're doing, or they're your friends, your family, or they're your followers on Facebook and Twitter or whatever it may be.
That's right.
They just give you some money because they want to. Or you can offer them some kind of reward where, for example, if you're creating a new product, then you might want to give them that product once it's actually created. And you could say, you know, we need to raise some finance in order to create this product. In 9 months' time, it'll be ready. If you give us £10 now, we'll give you the product in 9 months' time. Okay. And the third thing that it can do is it can allow you to offer shares to investors who actually want to get a stake in your company. Just like a stock market, the exception being is that this is a slightly different product to a large company offering stock. Because it's not easy for investors to sell those shares. They're with you for the long term.
Yeah, that's fair enough.
And it allows you, essentially, rather than having one big rich investor, it allows you to have maybe hundreds, if you want, of investors. And the platform allows you to communicate with those investors easily and make sure that you've got the right level of protection for both the business and the investors as the business grows and moves forward. So it's essentially raising finance from a crowd online. Right,
understood. Okay, I'd like to I want to come back into the details of crowdfunding and how to be successful in a minute. Because our audience is primarily Asian Muslim, and I think what we're talking about here, because it's the original form of investment, if you like, before things got too regulated and messed around with, I think this is what's known as Sharia compliant, in which case it'll be of particular interest to this audience. And I believe we have someone on the line who is an expert in Sharia finance. Is that right? Good afternoon.
Yes, hello, good afternoon.
Good afternoon, how are you?
Yeah, my name is Mufti Barakatullah. I'm a Sharia advisor.
That's excellent. Have you been listening to the program so far?
Yeah, just joined in the last 10 minutes.
Oh, thank you. So it seems here that the crowdfunding and what we're describing here is the original way that people used to get together to fund ventures, fund businesses and trading and all the rest of it, and that this should be a modern way of providing investment for communities to help people within their communities to start businesses, and it should be Sharia compliant. From what you've heard so far, is that the case?
Yeah, what I heard, I've been always baffled with the success of the crowdfunding. The idea is good, and if it is working, that's good luck and fine. What I still trying to come to terms with that, how do we deal with due diligence, monitoring, or preventing the conmanship? Because in the real business world, still there are financial conmans who rip off people in the name of selling them dream. So what are the mechanisms there to prevent crowdfunding from selling dreams and unrealistic things? I mean, apart from it being a good idea, I mean, I'm just concerned with the safety and security and monitoring mechanism there.
Sure. Okay. Well, I can tell you what we do. So, firstly, we're a member of what's called the UK Crowdfunding Association, and the UK Crowdfunding Association is a group of the top crowdfunding platforms who have all come together to make sure that we're following best practices, because we don't want to ruin this market. And we don't want any of the scandals and things. I mean, there will eventually be some, because every single financial market has them. It's inevitable. But what we're really focused on is making sure that we're implementing practices. So if somebody's going to be pitching on our platform, we actually first do, we're not filtering for whether we think they've got a good idea. We don't think our job is to determine whether they've got a good idea. We think the crowd can determine whether they've got a good idea based upon whether they invest or not. But what we do filter for is firstly fraud. So we use the very same methods that a bank might use in terms of doing the credit checks and the CCJ checks and the same processes. On top of that, we also pull data from the internet like LinkedIn and Facebook and Twitter, which tells us a lot of information about the people, on top of the traditional methods that are used by banks. And then finally, if they get through the next process, then our requirements, personally, this is us as a platform, is that they think through every level of detail through their financial models, through their business planning, and put together a strong investment case that they would have traditionally maybe gone on and tried to pitch to a bank or pitch to a rich person or pitch to a venture capitalist. And we incubate them through that process. And then once they've been through that process, is then up to the crowd to determine whether they think this is a good business or a good idea. But you're absolutely correct. Due diligence is essential in order to protect the integrity of this sector and of this industry. And there's a lot of data out there that was never available before. And personally, things like ratings, the new regulator to me today is I'm way more concerned about what people are saying about us on Facebook and Twitter and LinkedIn than anything else. So, we think that there's lots of scope there for using this data because for people to protect their reputations. But we perform the same due diligence that would be involved in many of the traditional forms of finance. And that's a particular thing we're really focused on.
Yeah, that is very reassuring. Yeah, that's very reassuring. Can I just share with you another dimension of this crowdfunding? I mean, I came to know in Germany, and it was brought to us for the purpose of checking the Sharia compliance, which I and my colleagues did go through, and we were pretty sure that it will be Sharia compliant. It is the insurance industry where there is a lot of fraud in claims, false claims and exaggerated claims. So this type of crowd insurance idea is trying to reduce that fraud in continental Europe. So, I mean, there is another dimension to this this idea of crowd portal, if I can say that. And this idea is still in infancy. So to bring the real, like you have brought the real investor and real producers in connections. So the insurers and the insured, they can be brought together in this way also, which is idea is under trial still in Germany.
Sure. And what we're seeing is, the original visions of things like stock market and the original insurance products as well were essentially a group of people getting together. But over the years, that's been commoditized through investment banks and different institutions into unsustainable speculative products. So what the crowdfunding vision is that the world that we've moved towards today is a world where now banks determine who gets funding, or institutions like venture capitalists determine who gets funding.
Yeah.
But what we're trying to move towards now, and the crowdfunding is the very beginning. We're at the very beginning of something new here, which is, well, it's not new. is just turning, very traditional old principles online. But we're at the very start of the democratization of of investing and who determines who gets funded, away from institutions like banks and venture capitalists towards people. And it's very, very exciting. It's in its infancy right now, but a forecast of the future is that every single product, from insurance to mortgages to every type of product, is going to turn into a crowdfunded, people-funded, uninstitutionalized product over the next few years. So it's a really exciting time, and it's a shift from institutions deciding who gets the money to people deciding who gets the money.
Yeah, that's very exciting to hear. Yeah, and this type of consumer to consumer model or consumer to investor to consumer model, I wish all the success. And if I can express that, it will be generally Sharia compliant unless the product or the business itself goes into the non-compliant area.
Sure.
So from the Islamic point of view, from the community point of view, all the good things, good businesses should be supported and should be done by the consumer for the consumers.
Well, when people are funding stuff, you have to imagine that we're going to move to a world where what gets funded reflects the values of society. So if a non-compliant business gets funded, it's not because somebody in an institution looking at profit alone is funding that without people knowing what's actually happened to their money.
Yeah.
It's because society has decided that they want to put the money in. So my belief is that society cares more about society than institutions and large financial institutions who care more about profit. So it will be an interesting experiment to see what actually gets funded and what the true values of society are.
Mufti, can I ask you a question on this, please? My understanding is that if a business is not involved in speculation, that it's primarily then Sharia compliant. But what are the other rules for Sharia? I know it's a very complicated subject, but just the basic rules for Sharia compliance.
I mean, it's like the ethical finance. I mean, but only the frame of reference is some universal values. So apart from some general guidelines about speculative, non-real, there should be transparency. The nature of the business should be useful and productive, useful to the society, and nothing harmful. So the tobacco, gambling, and wine production and intoxicant alcohol, all those things which are considered by general people also to be harmful, is harmful and declared harmful from Sharia also.
Okay.
So it's just really the common sense which is now being translated through the ethical finance, that whatever is unacceptable for the general public and general morality should not get off the ground or should not receive rewards. So I suppose this mechanism, crowdfunding itself, will bring lots of ethics, individual ethics, group ethics, religiously inspired ethics, or universal ethics into the businesses.
Yes, because I've been thinking for some time actually, and if you can stay with us for a couple of minutes, I'd be very grateful, because what I've felt for some time now is that people are really getting fed up. Ordinary people are so fed up with the way that Western finance, or whatever we call it, has been acting. Interest charging finance, fractional reserve lending, the invention of money out of thin air, and the whole blooming thing. And I think really there'll be a tremendous support from ordinary English people, indigenous English people, for fair banking and fair finance treatment. Going back to where we used to be before interest charging was allowed. There was proper merchant financing. and things like that. You know, I honestly think that Sharia compliant banking or old-fashioned proper banking, if you like, if it was properly explained to people, and how this derivation of, certainly not advance from it, almost perversion of it, has actually done so much damage, that people would be very, very happy to go back to what is called Sharia banking, but is in fact proper banking. Is that, what are your views on that, please?
I mean, we see in various parts of the world, the Sharia banking or Islamic banking is not exclusively for Muslim by Muslim, but at every level, investor level, customer level, and managerial level, all three levels is shared. This platform is shared by Muslims and non-Muslims alike.
Yeah.
So, I mean, it is like the value which is appealing to the people, whether irrespective of their faith, really.
Yeah.
So it's bringing the Muslims and non-Muslims who shared some universal values together in finance.
Yeah, and I think here this seems to be the case also on a human scale, financing on a human scale, people actually leading with their feelings, with their principles, with their morals, and what they care about in investment, rather than having this intermediary which is supposed to be there for the public interest and to keep us safe, but has in fact taken the whole thing and turned it upside down and made a nonsense of it.
Well, there's three things about traditional Western banking that many people don't know that cause this situation. The first is that when you deposit your money with a bank, they actually become the legal owner of that money. And at the moment, they're experiencing that in Cyprus right now because they're not actually, they've had their deposits confiscated, essentially. The second thing is that when they become the legal owner of your money, in the background, without you knowing what's happening, they're doing all sorts of stuff with that money. So you don't know what your money is funding. You don't know what's happening with your money. You don't know how speculative or productive you're being with your money. And you don't know what's actually happening. And if you get your wages paid into a bank, you're opting into that system and you have pretty little choice of what's actually happening there. The third thing is that the banks actually are the creators of money. And essentially, when somebody takes out a mortgage, it's not somebody else's savings sat there in the background. They actually write the money into existence with that contract. And so with us, for example, if we wanted, if we want someone to invest, first they have to deposit and then they have to invest. With a bank, first somebody determines, they issue a loan into existence, and then that turns into a deposit. And it's completely, it's very misunderstood. Now, when we get to the root of these three issues, we get to the root to solutions to the crisis, we get the root to, real sustainability. And what's really important for us as an alternative finance sector is to create some kind of way of people having a choice, whether they want to opt out of that system, and the Islamic banks have done the same thing, whether they can opt out. The challenge is that when you get behind that, all of us have to still clear through a traditional speculative bank. So the next vision and the next phase of what we want to achieve is make it so that we can completely opt out of the speculative bank, and we can create a system whereby people can determine, would you like to know what happens with your money, or would you like to leave your money here where the bank determines what happens with your money? And so for me, why crowdfunding is one element of that, there's lots of other things. So there's a lot bigger mission, but one of the really important things that I'm really passionate about is I believe that businesses that are out to do the right thing, that can employ people, that can take such a risk, because setting up a business is hard work, it's risky. If they can take that risk, I think and they're the right people that are willing to work hard, then I think they deserve to have a process of getting funded. The problem is who's going to take that risk? Right. The bank doesn't want to take that risk. So for me, the only way I can think of of rather than going to your parents and saying, can you risk 50 grand on me, is can I get lots of people to risk 10, 100, a few pounds on me, and we can pull the money together and share the risk.
Okay. Let me just go back to the Islamic banking for a moment. I understand in Islamic banking one has to share risk. That's one of the basic principles of it. You're not allowed to make a risk-free investment or just take it. Is that correct, sir?
Yeah, that's correct. That's correct. Yeah.
So is it also correct then that when if you deposit money in an Islamic bank, do you then know what's being done with it, or do you have the same problem that Simon was describing in Western banks?
We have both choices. One is in an Islamic environment, it is called unconditional investment and conditional investment. So it can be either, whether you want to know and get involved, or you don't want to know and get involved, leave it to the discretion of the professionals. So both choices are perfect depending on the person's and investor's appetite.
Okay, but then again, the Islamic bank itself will only be investing in things which are non-speculative and non-dangerous or non-harmful to people anyway.
Yes.
So you have that degree of cover and assurance anyway.
We do have the equivalent of, in a Western way, which is called a social bank. And there are social banks out there, the largest of which being the cooperative. And then there's more niche ones like Triodos and various other social banks where you understand the, you know, and what's actually happening with your money, or not what's happening. You trust with the bank that they're going to be using the money in the correct way. The challenge is that there's very little options in the Western world to opt out altogether, simply because in order to have a banking license, you either have to clear through another bank and then the money, you know, is sent to collateral in that bank, or you have a direct bank account with the Bank of England, and those don't come too easily.
No, I understand.
So,
yeah. Is it part? There are actually full Sharia-compliant banks in the UK, aren't there, sir?
Yes, there are a couple of retails and a couple of wholesale banks. And the irony is that the wholesales which are large term and very considered investment banks, they are more successful than the retail one at the moment.
Right. So if we could actually just use the term ethical bank then rather than Sharia bank, then it does seem to be an opportunity, from what Simon's saying here, for a lot of non-Muslims to have their desires satisfied of ethical banking by actually putting their money with a Sharia-compliant bank.
Yes, indeed. I have written an article on this, the fusion of ethics and Sharia banking. The heavy loaded value and Islamic terminologies is maybe putting some people off. So the Sharia banking and the Muslim investors or people who are interested, they should be really using the neutral terminologies to make its appeal wider, like the crowdfunding is being done. So that the next phase of Sharia banking or Islamic finance will be ethical ground.
Yes, I think just calling it ethical banking is a very proper term, actually. Okay, well, thank you very much indeed, sir. It's been very, very good indeed to have you calling in like this. I'm most appreciative of it. We've got about 30 seconds left to wrap up now, so I will give Simon your details, if I may, and perhaps you can have a private conversation in the future. Yes. Thank you very much indeed. Well, Simon, thank you very much indeed. We've probably just scratched the surface of all this, but time's really flown, and thank you very much indeed. I'll be putting Simon's details up on health-wealth.tv. There will be the contact details for him. It's on the screen now. and those will be on hopefully tonight or tomorrow morning latest. And in the meantime, it's one of those things where you have a little bit, and it opens the door to a whole world. So we may have now actually got a lot of non-Muslims going to Sharia-compliant banks because they are ethical. Simon, thank you very much indeed.
Thank you.
Thank you. And we wish you the very best of fortune, and I hope we get a lot of communities looking at going towards Simon's site for community finance. Goodbye.